Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So, home loans for manufactured homes. Your mobile homes, manufactured homes, mobile homes, single wide, double wide, who's wide, you're wide, everybody's wide, especially after the pandemic because we all got fat and it is what it is. But let's go ahead and get down. Who does mortgages for manufactured homes? I'll tell you one guy. This guy right here in the state of California. So if you are looking for any mortgaging assistance with your double wide, single wide, although they're wide, let me go ahead and let you know. Link is in the description below for up to 50% commission rebate for 0% listing on selling your current home or any mortgaging assistance. Let me know. So let's get on with the manufactured housing guidelines. So what are some requirements that we have that is very, very specific to manufactured homes? First of all, let me go ahead and note, I try to avoid manufactured home loans. They're a big pain in my ass. They're very, very, very difficult because you have to worry about tags, registration. Has it ever been licensed? Is it on a foundation? Is the foundation solid? Was it pre-78, post-78? It's just such a big, big, big headache. But if you need help getting to that point and you need somebody to help you, of course, I will be more than happy to help anybody. And if I can't, I will be more than happy to guide you to somebody who is just as good, not as handsome, but definitely as good. So here are some of the requirements of the Fannie Mae manufactured housing. Now this is what's called a home ready type of loan through the Fannie Mae manufactured housing product. Fannie Mae is the people who insure it. They're the insuring bodies, which is a mortgage-backed security. Mortgage-backed security is insured by two major corporations, which is Freddie Mac and Fannie Mae. So Fannie Mae does this. So yes, it is very, very difficult. It is very annoying. It is very like a complete nuisance. But when you got people who actually know what they're doing, it doesn't become that much of a headache because my job as a mortgage broker, my job as a real estate broker is to make sure that all the pain in the ass that happens during the process, you never see it and it all falls on me. I'm supposed to package it in a way that it gets closed and it gets done quickly. So here are some basic requirements as far as the general eligibility as far as manufactured homes. So the main thing is, I'm going to go to the credit score and all of that stuff afterwards. So the main thing is that the unit itself has to be on a solid foundation. It has to be able to be put on a solid foundation. Number two, single wide and double wide, of course, they're both permitted. And it has to be classified as real property. And that's why I say that it has to be put on a foundation. Because once you put wheels on that thing, it is no longer, I mean, it is still a mobile home. And you know what? That's a really good point. Why would the wheels really be a problem? Well, whatever. Fannie Mae's the people who are insuring it. It's not my money that we're playing with. So it has to be at least a one-unit dwelling. It has to be considered as a real property. In order to be considered real property, it would have to be put on you guessed it, on a foundation. A foundation that is not movable, and it is going to be movable, but it has to sit on a foundation. And then here's the floor area. The floor area is one of the things that actually get us hooked up on when it comes to the single wides. So if you are interested in a single wide, you want to go buy a brand new one, you want to go even a double wide, some of the double wides, you rarely see this, but on a single wide and double wide, the minimum living area that you have to go ahead and make sure that you stick between is going to be 600 square feet. 600 square feet, no less than that. If we go less than that, then we have to go into other products, which is classified into a tiny home, and you don't want to go down that route either. And trust me, I am not going to be that guy that's going to do that again. I'll send it off to one of my originators and have them do it, but you don't want to go down that route. It's really, really frustrating, really annoying. Appraisers become jerks about it because it's very difficult to go ahead and do a comp when you have a house that small. At least with a mobile home, we have comps. So some of the highlights of it, well, there are affordable ways that you could go ahead and buy it. We could go ahead and do 3% down on this, which is 97% loan to value on this home ready product. 3% down is not that much, especially at the prices that some of these mobile homes are going for, especially one that's already in a mobile park that is sitting on a foundation and you're just going to go buy it. Those are the best. Please call me for those. Those would be awesome to go ahead and do. There are going to be 30-year fixed rate mortgages, same like as a regular one. Standard mortgage insurance requirements are there. Nothing out of the ordinary that is along the lines when it comes to this product. So let's just go into the basics of what we have going on here. Now, like I said, you can do a 30-year, but you do have the option of going 20-year, 15-year, or 10-year. There's going to be really, really low mortgage insurance on these because it is a mobile home. You do have purchase and refinance options available. You can cancel your mortgage insurance after you get that 80% loan to value. It does have to meet property, location, AMI qualifying limits. Okay, so what does that mean? That just means that it has to meet certain property location, like the foundation. It has to have an address. It has to be in a park or someplace that, or like on a parcel of land that you have that we're able to go ahead and classify as real property. Borrower, if you are a borrower, it does not require to be a first-time buyer to get this program. And I know there's this misconception of FHA programs where everybody thinks that, oh, it's a first-time home buyer. No, that is actually Federal Housing Administration. This, since it's a low down payment, it doesn't mean that it's for first-time home buyers. It's for you buyer. Any buyer out there, it could be your first, your 20th, or your 50th. It doesn't really matter. You could always utilize these low down payment programs that you want. Now, here's a few little things that we want to make sure that now here is one thing that we do have to go ahead and note. You will be required to take a home ownership course. And let me go ahead and state, loans closed on or before after December 7, 2019 require the online framework course for this program. For at least one borrower, only if the occupant buyers are the first-time home buyers, regardless of loan to value, the course is beneficial to the borrowers by helping them learn about substantial home ownership, as well as helping them understand the loan process so they are better prepared for what they accept from moving home, search and loan application to closing. What does that mean? They just want to make sure that you know what you're getting yourself into when you're buying a home. But if you watch most of my videos, then you already know what you're doing. You already know what the home buying process is, and you know that it's supposed to be a bitch unless you got somebody who knows what they're doing, and then you don't have to really worry about too much of anything. Now, this program, because of the loan down payment, there are income restrictions based off of this. These are county restrictions. These are city restrictions. So if you do have any questions about it, link in the description below. I will go ahead and let you know what it is. But it is the area medium income, which is typically 80%. 80% of the, which you'll see it on the AMI area medium income. You just have to be 80% of that area. So you could Google it, see what your area median income is, and then you could kind of get an idea of where you need to go ahead and be. Now, to get to the very, very basics of everything, credit score. Credit score minimum is going to be 620 credit score. Bare minimum credit score is going to be 620 credit score, but by all means, I will say this in every single one of my videos. Even though I mentioned that the bare minimum credit score is 620, don't stay at the 620. Please fix your credit. You don't want to get into the 620 range because then you're going to increase your payment. It's just a pain in the ass. You don't want to deal with it. We have way more things to go ahead and just charge everything off. We don't have to worry about charge-offs. Charge-offs are a bunch of shit anyway. Then we're going to go ahead and go into loan to value. Loan to value, max we're going to be able to go on the back, well, it's 97% loan to value. You have to be between that 80% area medium income, and then we're going to go ahead and go into your ratios. Your ratios. Now, what is a ratio? A ratio is going to be the total amount of income you have coming in minus your total expenses, then your principal, interest, taxes, insurance, and that will give us a total back-end ratio. Now, our total back-end ratio is going to have to be at 47% back-end ratio. So all you have to do is take all the bills that you have, put them together, go on the website. My website, link is in the description below, www.aldenmortgage.org. You can go ahead and play with the calculator to see, okay, if I'm making this much, how much of my mortgage? You could put in the numbers. You could do all that. Go in the calculators tab and play around with it as much as you want. Then once you do that, you could get your principal, interest, taxes, insurance, and then combine all of that. Then you're going to take the total amount that you have on your income on your W-2, your total gross, not your net, not how much you took home, your total gross before taxes, and then just take a decimal point, put it over twice, multiply that by 0.47, and then you will get the total amount that you are debt obligated to have when everything is all said and done. I don't know if I explained that correctly. Take the total amount that you make. You could do a monthly, you could do yearly, whatever. Before taxes, multiply that by so if you do a year, right? Let's just do a year. If you made $50,000 for the year, you are going to go ahead and multiply that by 0.47, which 0.47, I should have known this by now, would be $23,500. And then if you divided that by 12 monthly, that would be $1,958.33. That will be the total amount your obligation will be as far as your debt on the max side of things total. Now your front end would be 35 to 37, depending on your credit. And that in a nutshell is pretty much it. So the biggest hurdles we'll ever have is has this mobile home ever been titled? Did it have license plates? Is it on a foundation? Please don't let it be on stilts. That's another thing you're going to want to take a look at if you're buying an existing one, or if you're planning on putting a brand new one on. Make sure you just put it on a foundation. And if you got all of those, everything else will be all hunky-dory. And I hope that this explained everything. If there was something I missed or there's something else you wanted me to touch on, link in the description below. Go ahead and comment. For up to 50% commission rebate on your next home, for 0% listing on selling your current home, or any mortgaging assistance at all, hit me up. Let me be your broker. Let me be your big bank. That's what I am here to do. Till then, I think I covered pretty much all of it. Till next video, guys. I appreciate you watching. Oh man, I forgot to put the backdrop and everything. Try so hard with these damn videos, and then I always mess something up. Whatever. You guys got the gist of the video. I'll make another video and make it all more prettier. Thank you guys for watching.